1.25% on the futures. We could have fallen hard given the global backdrop today and the slew of earnings as well, which the markets are reacting to. So Reliance clearly providing you that apt cushion. Aside of that, let's also focus on some more earnings. We've got on board with us Naresh Jalan, the MD at Ramkrishna Forgings, joining in. Naresh, hi, good morning. Help us understand what's aided your operational performance in an overall weak market.
I think in continued time, exports will continue to grow. This quarter, we have grown in the European market very well. Almost 10% of our top line is from European market. And our shift into exports in European market is doing well. And we have one significant business also, which will contribute to higher growth in FY21 from European market. As such, we feel that the export market is continuing to do well, and this next 3 quarters also for this financial year, we will be continuing to do well in the export market. While domestic market remains challenging, we are still awaiting clarity from the government in terms of stimulus or whatever they want to do for the auto sector.
Right. The July North America Class 8 truck sales are the lowest monthly orders since February 2010. How is it that you're tackling the challenges?
This year, we don't expect any sluggishness. I think, like I told you, last quarter for FY20, we have a clear visibility in terms of order inflows. From the first quarter of FY21, I think probably what I have said that we expect 10 to 15% decline in the orders from our OEMs, but because of our increase in content, we don't feel we will be adversely affected with that. As well as, like I said earlier in my call, that we have opened up new markets in Europe. I think that is going to give us a push-up in terms of whatever slowdowns we have in the US market. New markets such as Brazil and other economies are coming up extremely well, which is now going to aid further export growth for us going into FY21.
Mr. Jalan, so if the NA Class 8 trucks could see a double-digit decline next year, how is this going to impact you, the company, and your mitigation strategy? What is in place?
Overall, out of my entire exports, whatever we do, close to around 65% comes from Class 8 trucks, Class 8 and Class 5 trucks. But of late, what we have done, we have developed LV vehicles components also for US market. So what I said in my call earlier also that we don't expect any adverse impact in terms of our growth in exports is concerned with slowing of demand. While whatever OEMs have told us, as of now, we are aware that they expect 10 to 15% slowdown next year. I don't think with the current volumes or current manufacturing data, whatever we see, 10 to 15% drop in volumes, obviously after a 4-year peak, was always understood. And I don't think that is going to adversely affect any of the suppliers supplying to North American market.
And you're hoping to see export contribution from Europe reach nearly 30%. So what is the targeted timeline for this, and what is the domestic and export revenue mix that you're targeting?
I'll ask your last question, I'll answer first. No tailwinds for currency because our currency is passed on every quarter. Every 3 months, whatever increase or decrease, whatever is there is passed on to the customer. And so we don't face any tailwinds related to the currency. It's only a 1 quarter lag. Second, in terms of our total percentage, in terms of our exports, we continue to be very, very optimistic in terms of our growth in exports. And from the current levels also, by FY21 and FY22, we assume we are working on close to around 45 to 50% of our top line to be export.
Right. So given the slowdown, are you planning to readjust your capex as well?
We are not trimming our capex plan. We have our capex plan staggered over next 2 years. We have already spent close to around 70 plus crores in our current capex. And our current capex, whatever we are doing is related to major exposure which is going to come through railways and second is through light vehicle components and EVs. So we have not scaled down or not deferred our capex as such. Our first part production is going to start from last quarter of this year, and full production is of our entire plant is going to be up and running by the last quarter of FY21.
So what is the outlook on the domestic CV cycle, especially since the industry is gearing up for BS6, scrappage, etc.? So what are the stimulus efforts or announcements for the sector as a whole that you're expecting?
I think in continued time, exports will continue to grow. This quarter, we have grown in the European market very well. Almost 10% of our top line is from European market. And our shift into exports in European market is doing well. And we have one significant business also, which will contribute to higher growth in FY21 from European market. As such, we feel that the export market is continuing to do well, and this next 3 quarters also for this financial year, we will be continuing to do well in the export market. While domestic market remains challenging, we are still awaiting clarity from the government in terms of stimulus or whatever they want to do for the auto sector.
All right, great to have you. Thanks very much.